Hello everyone, welcome to today's backtest video. And for the first time on this backtest series, our backtest is going to be on Nasdaq 100, also US 100, and on gold as well. So our first focus will be on Nasdaq 100, and then after discussing the London session on Nasdaq 100, we'll be going over to gold. So as you can see on this is a 1 hour time frame on Nasdaq 100, and you see this 1 hour volume imbalance. Like I said, the volume imbalance is the gap between the body of two different candles. So this is the body of candle one, this is the wick. The wick can actually overlap. This is the body of candle one, and this is the body of candle two at the top. So the gap between the body of the of candle one and candle two, that's your volume imbalance, okay, which I annotated here in yellow rectangle. So moving to the 5 minute time frame, so we discuss what we're actually here for. And the core focus of this video, okay, obviously it's the ICT 2022 mentorship model, but we should be focusing on the ICT silver bullets. Okay, the ICT silver bullets are the London session key zone. The ICT silver bullets are the London session key zone. So the silver bullet is a 1 hour time window. It's a time-based setup. Okay, a 1 hour time window whereby price moves swiftly to liquidity during that time window. And the London session key zone has its own silver bullet, same as the New York AM and New York PM session key zones. So for this video, we'll be focused on the London session key zone, which played out today, January 28, 2026. So this was the start of the day, 28th, January 28th, 12 p.m. And you can see this drop down in price into the 1 hour volume imbalance. This is the 5 minute time frame. You can see this drop down in price into the 1 hour volume imbalance. So let me mark out the London session key zone. So the London session key zone is actually 2 a.m. to 5 a.m. Okay, so this is actually the London session key zone. Okay, and you can see prior to the start of the London session key zone, price actually took out this high. Okay, taking out what buy stops. Okay, there is buy stops resting above this high. Okay, buy side liquidity resting above this high, which price took out, rallied down, and at a specific time, this is actually an order block. Okay, you can see this up close candle followed by these two consecutive down close candles. Okay, you can add this as well. Let's go to an higher time frame, 15 minutes. If you see this clearly, okay, on the 15 minutes time frame, it's actually displayed as a wick. It's on the 5 minute time frame. Okay, this is actually an order block. Okay, so this up close candle right here, 135, 135 candle, followed by this consecutive down close candle. So this is actually an order block. Okay, so I'm going to take it as OB. Okay, let me make this green. Okay, buy side being taken, buy stops being value down. And you can see below the order block, there's actually a fair value gap right here. This is the fair value gap. So result? What's the London silver bullet time window. The London silver bullet time window is 3 a.m. to 4 a.m. Let's mark it out. It's 3 a.m. and make this red. Then this is 4 a.m. So as you can see, price doesn't move based on buying or selling pressure. Okay, the movement in price is actually algorithmic, and this algorithmic movement works with time and then price. So the London case on 3 a.m. to 4 p.m. At this particular time window, you can see price trading up into this other block. Okay, after price has taken out these buy stops, okay, traded down, created another block, and below it a fair value gap which I annotated with a yellow rectangle. Okay, traded into the other block. Okay, and still at this time window, you can see it starts rallying down. Okay, this right here is also an order block. You see this green, this up close candle, followed by this down close candle. Down close candles, one, two, three. These are, sorry, not these are. This is an order block. Okay, okay. There are actually two green candles. This one and this one. Okay, these two green consecutive candles, followed by these black consecutive candles. Okay, up close consecutive candles and down close consecutive candles. So another block is the change the state of what of delivery in price. So these two up close candles are actually buy side delivery being offered, and this down close candle has sell side delivery being offered. So this is also an order block. Let me just clone this. And you can see also at this time window price traded into the second order block being created in price and rallied down and started rallying down to where you can see this is 4 a.m. Okay, the end of the London Q zone silver bullet, and it's already close to the 1 hour volume imbalance. And after 4 p.m., it traded directly into the 1 hour volume imbalance. And watch what it does. After trading into the 1 hour volume imbalance, it trades right up. Okay, and you can see our price respects this level. So I'll quickly take off the key zone time window so you see the silver bullet time window and see how price works with it. Okay, so this is proof that price is actually algorithmic, and I'll be showing this same thing on gold, whether price made use of the silver bullet time window, okay, to run down to take out liquidity, okay, also on this video. So stay long enough and you see this displaying on gold as well. Okay, so I won't really be talking about the New York AM session, the New York AM session on Nasdaq, because this is really very jagged. Okay, can this price leg be traded? Yes, it can be traded. Will I trade this kind of price leg? Will I be in a market like this? No, thank you. I won't be in a market like this. I would rather be in a market that is favorable to me. Okay, I would rather be in a market that has low resistance liquidity. Okay, sorry, a low resistance run to liquidity, whereby it finds it very easy. Okay, it trades very swiftly to my targets. That's the kind of market that you want to be on. Now switching to gold. Okay, this is gold, and you can see I already map out everything that was played out during the London session. Okay, so let me mark out let's bring out the kill zone for the London session. This is the kill zone 2 a.m. to 5 to 5 a.m. And you can see price actually traded down to this sell side liquidity after 5 a.m. Okay, so during this Q zone, price traded to take out these buy stops from this high, displaced down, traded down with displacement and form the fair value gap. Okay. And if you notice, there's a volume imbalance at the top. That's why I had to give room for the volume imbalance, and also at the bottom. And price traded into the fair value gap, rallied down, formed the second fair value gap, and after 5 a.m. it traded into the fair value gap to run down to take out sell side liquidity. And as you can see relative equal lows right here, this low, and even this low right here. Okay, so these are sell side, they are sell side liquidity resting below these lows. Okay, and you can see our price trades into it and returns back into the range. Now let's bring out the silver bullets time window. Silver bullet time window for the London Q zone is 3 a.m. and maybe it's red to 4 a.m. Okay. So as you can see, after 3 a.m. that was when price took out the high during the time window, and during the time window that was when this displacement in price actually happened, taking out this short-term low and creating the fair value gap inside the time window. And towards the close of the ICT silver bullet time window, price traded into the fair value gap. And as you can see, after 4 a.m., which was the end of the which is the end of the ICT silver bullet time window, price starts dropping down from the fair value gap. Okay, before creating the second one, taking out this short term low, creating the second fair value gap, and after 5 a.m. price traded into it, and you can see the displacement with which it runs down to take out the sell side liquidity. Okay, showing it's not actually random. Price is not actually random. It was actually running down for this particular level specifically. Okay, and as you can see, after taking it out, traded started running up back into the range. So let me take this off. Also the silver bullets time window. So there are so many PD arrays apart from the fair value gap you see right here. The fair value gap you see right here, which price used to take out sell side liquidity. There are so many PD arrays, okay, on this price range that some of you might not take note of. Maybe those who are familiar with ICT concepts, okay, maybe you've seen some of them, but there are so many, okay, and there might be some that I won't even point out, that I might not even take note of as well. But for those that are new, I guess all they see might be just these fair value gaps. So here's one. This is actually an order block. This right here. You can see these green consecutive candles. These up close consecutive candles. 1, 2, 3, followed by this down close consecutive candles. Okay, so buy side being offered and sell side delivery being offered. So this is an order block. Let's move to the 15-minute time frame to see if it's actually okay. On the 15-minute time frame, you can actually see it clearly. So this green candle, up close candle, followed by this down close candle. Okay, so this is an order block. And if you are familiar with this, okay, you notice that price being just in this block. quickly annotate its other block. Okay, so you notice that price didn't just trade up into this fair value gap. Okay, price also traded up to the other block. Okay, to rally down. So this also is another block. You see this up close candle followed by this down close candles. Okay, but price wasn't able to trade up into it. Price just made use of the fair value gap, the fair value gap below it. Okay, to rally down. So you would think these are the only PDRAs, okay, that are present in price, but no, there are other PDRAs actually present on this price run. So you see this price run up and this price run down. It can actually be divided into two, okay, which is the right side of the curve and the left side of the curve. So this is actually the left side of the curve and this is the right side of the curve. So every PDRAs that is being formed at this left side of the curve, okay, which is acting as discounts and support for price, which is acting as discounts and support for price to rally upward, okay. On the left side of the curve, these PDRAs at the sorry, on the right side of the curve, these PDRAs at the left side of the curve, which is acting as discounts and support for price to rally up. They will be acting as premium and resistance, okay, at the right side of the curve for price to rally down. So that may not make sense to so many of you, but I'll be showing you right here how it works. So first I'll take this off. So all these PDRAs which I show you, which I've shown you right here, they are all their PDRAs actually at the right side of the curve. Okay. So I'll be taking this off and I'll extend the PDRAs formed at the left side of the curve, okay, to the right side of the curve. Then you see how price makes use of them. So if you watch closely, this is actually there's actually a fair value gap. Then you see there's actually okay. So why price was taking out this high? Okay, price actually created what a fair value gap, and this is a bullish fair value gap. Okay, let's say if price was to continue to rally upward, we are likely going to use this fair value gap, okay, as a means for price to trade up. Okay, so it's going to act as a discount. Okay, so meaning price will drop down to discount. Let me bring out my Fibonacci in my feed. So okay, you see this 0.5 line. This is the midpoint. So the top of this range right here, this is premium and this is discount. Okay, so this fair value gap right here, this bullish fair value gap at the left side of the curve, if price was to continue higher, price is going to trade down into this fair value gap, okay, down into the discount, okay, which means it will be acting as a discount, okay, and as a support in price, okay, for price to rally upward further. But you can see that this fair value gap actually failed because price took out this high and rallied down. Okay. Now if you extend this fair value gap to the right side of the curve, okay, is there a volume imbalance beneath? Okay, no, there's no volume imbalance. Okay. Now if you extend this at the right side of the curve, if you notice, price is using this like as the resistance. Okay, it's acting as premium for price to rally down in price. How is it acting as premium? Okay, let's look at this price leg. This price leg right here. Okay, so on this price leg, this down movement, this drop down in price, Like I said, this red line is a midpoint. Up here is premium and down here is discount. And you can see price trading above this 0.5, this midpoint, okay, into premium, making use of this fair value gap, this bullish fair value gap formed on the left side of the curve. Okay, it's making use of it as a resistance, okay, and it's acting as premium at the right side of the curve to trade down. So this right here is actually called an inversion fair value gap. Okay, it's an inversion fair value gap. So price would use it. This is actually a bullish fair value gap. Okay, but why price is dropping down is going to make use of it as a bearish, just as it's going to make use of a bearish fair value gap. Okay, so this is an inversion fair value gap. Now this is one PD array, okay, at the left side of the curve being used, okay, and you can see it's being used at the right side, and you can see how price respects it. Okay, also at this price leg, you can see this consecutive candles, down close candles, 1 2 3, then followed by this up close candles. Okay, this is actually what was this. This is a bullish order block. Okay, another block change in state of delivery in price. Sell side delivery being offered, followed by buy side delivery. So the moment price rallies above the open of each of these candles, okay, it validates it as an order block. So this is actually an order block, and you see how price makes use of it at the right side of the curve. Okay, so why price trades below the low of the order block, okay, why price breaks the order block, this is a bullish order block. Why price trades below it, you extend the line out the price, and you see how price, after price trades below it, you see how price trades back into it, okay, making use of it, okay, as a premium to go down, okay, as a resistance to go down, okay. At the same time, price also trading into this inversion fair value gap. So okay, there are more. You can see the bullish fair value gap right here in price. Let's draw this out and extend it to the right side of the curve. So this is also an inversion fair value gap, and as you can see, price respects it at this point, at this level, okay, whereby price actually drop down into it to trade up to this one, okay, makes use of this as an inversion fair value gap, traded down below this one, and you can see price also makes use of this one as well, okay, to rally down to sell side to take out these sell stops below these lows. Okay, so this also is an inversion fair value gap. So there may be more PD arrays which I might not have stated on this video, but if you see more, if there are some of them you can see, okay, on this video right now, state them on the comment section, okay, and let me know. So I hope you found this insightful. Okay, now this video was a bit longer than my previous videos, okay, simply because I had to combine both pairs, the Nasdaq 100 and also gold XAUUSD. Also, if this has brought any value to you, make sure you like, subscribe to the channel for more incredible content and more incredible backtests. So until next time, have a fruitful week.